Welcome back, guys and girls. Greg Silverman here, Chief Investment Officer, formerly of CIOs and, well, still of CIOs and bow ties. This is our Come Learn With Me segment, where we curate articles that we put out last week, and we see which you all liked, and then we bring them back in to the studio, and we start reading through them with you, highlighting points. So we're always looking to learn. And some of these, it's always interesting for me to see which ones percolate, which ones people find interesting. So thank you. If you like this format of learning, please like and subscribe down below to our channel. And if you want to know more about how we implement this through investment choices, stick around to the end of this video where I will flash somewhere around here the URL where you can follow to learn more. All right, let's go. Competition in online sports betting is fierce and not profitable. Oh, okay. I knew it was fierce. All right, let's have a look. Okay, the growth potential in the nascent market for American sports betting is huge, but for now, operators are still losing money, a lot of it. The big picture, sports betting is taking a page from the playbook of tech giants like Netflix, Amazon, and Twitter, sacrificing profitability in the early days in the hope of ingraining themselves in customers' lives. Even if you're not a sports fan, you've probably seen or heard the deluge of ads from online sports betting companies offering major financial incentives to use their apps. What we're watching, this NFL season will go a long way in determining which companies live to fight another day in the ultra-competitive sports betting arena. This football season is crucial as more states legalize sports betting going into the season, and football is really the culmination of the US market. Barry Jonas, equity research analyst at Truist, formerly SunTrust, tells Axios. So, formerly SunTrust and BB&T. Where it stands, the Supreme Court only opened the doors to widespread legal online sports betting in 2018, and the sector is still in its infancy. So far, a total of 21 states, representing 40% of the population, allow online sports betting, according to Wells Fargo Research Note. Another 8 states allow in-person betting. State of play. The weekly fantasy sports operators, FanDuel and DraftKings, have taken the lead with market share of 33% and 19% respectively in the first half of 2021, the Wells report said. DraftKings, which went public in 2019, is currently valued at 19 bazookas. Wow. Legacy casino operators also in the running, most notably MGM's brand, BetMGM, and Caesars Casino and Sportsbook, which was formally launched in August. Yeah. If you've been watching sport, you've seen adverts for casino sport, Caesars Casino. Those companies are shoveling money into marketing and promotions, sometimes including hundreds of dollars of free bets. DraftKings and FanDuel are really customer acquisition platforms operating as sports books, Jed Kelly, equity research analyst at Oppenheimer, tells Axios. It's going to be highly promotional right now. The beginning of football season is the peak in terms of customer acquisition. Daniel Politzer, senior equity analyst at Wells Fargo, tells Axios. What's next? The operators are chasing a market that has massive growth potential. Politzer estimates annual US sports betting revenue growth to $11.3 billion in 2025 compared to 3.8 billion estimated this year. Wow. At some point, you have to start to show profit. But we're so early that investors are willing to pay a decent multiple for revenue growth over profit. That's where we're at, Kelly says. Yes, but analysts think consolidation is ultimately the most likely end game, with 3 to 4 players all but dominating the field. Amy Howe, CEO of FanDuel, last week told the FT, perhaps self-servingly, that the level of marketing spending that is happening right now is unsustainable and that many companies won't make it. There's a catch-22 for sportsbooks. Making too little money is obviously bad for business, but if they start making too much money, it may attract the attention of regulators. Certainly, states don't want to see too much problem gaming and social consequences, Jonas says. And there are lots of regulators, a gaming commission in each state, as well as potentially the federal government. The big question, whether regulators become concerned about the gamification of the old in-person betting process, too easy, too fun, too instantaneous, similar to the scrutiny that Robinhood's received for gamifying stock trading. Well, there you have it. Online betting, big sport, people are throwing lots of money at it to gain market share, so it's not profitable right now. Interesting, guys. I hope you like my cap. It's the Earth which we should all be looking to protect, ESG and whatnot. So how do we invest? How do we implement something like this in investment choice? Well, I'm not going to tell you. Head over to our website over here where you can, you'll have to register. I'm sorry to tell you, but where we will show you our very special curated selection of investment choices and what we're doing and how we're going about it and our philosophy and years and years and years of gray hairs. Okay, so follow that link. Come check us out. Come say hi. Appreciate it. Thank you for coming on board. Another one of our not looking. That's another series we do. Check it out. Looking over the manager's shoulder. Should be a link down below under Bright Talk. But for now, this is Greg Silverman for another session of Come Learn with Me and Mother Earth out for now.